Forex Focus brought to you by IG. Huge price action in the euro, pound, and Swiss franc against the US dollar, all coming off of the European Central Bank meeting in the last 24 hours. And you might say that is strange to hear because they hiked interest rates at the ECB, and usually higher interest rates can lead to currency strength. Why would an interest rate hike bring the euro down below 110 for the first time since July 11th? The expectation was maybe a little bit more, or at least some more hawkish talk out of Lagarde after the interest rate hike. And so, this isn't a rare occurrence where you get an interest rate hike that I think the market had priced in going into the ECB meeting, but you actually get a weaker interest rate market from that region, or in this case, a weaker currency market from that region, because the action itself was priced in, and the market was maybe looking for a bigger action or more confident talk to that action being committed again in the future. Did not get that out of the ECB. They commented that they'll be following the US and not necessarily trying to jump the US in the fight against inflation and hiking interest rates. And that has brought us, as you can see, down below 110 for the first time in a few weeks. And here is the current global interest rate environment. And another thing that is shifting Forex markets is that little bitty Japanese interest rate down there at negative 10 basis points. There is some talk that the Bank of Japan might be getting ready to lift their restrictions, their ceilings on interest rates at some point. And so that brought even more upside for the US dollar against the euro and the British pound, as inflation fears, essentially the market thinking, if even Japan is going to lift off of 0% here, inflation fears must still be very real. And when inflation fears were really kicking in, you'll remember in the later part of 2022, US dollar was running up the fastest and most in the Forex market. So we'll see where this all shakes out. Bank of Japan still has to talk. The Bank of England has to meet next week. But for the moment, this 25 basis point hike to get the Eurozone north of 4%, not as much as they were hoping. They were hoping to maybe get to 4.5%, which would be within a percentage point of the US at 5.5% now. And so for the ECB and the Fed to both move higher by the same amount, that came out as a US dollar bullish sentiment. Again, we'll see where it all shakes out. Of course, if US inflation, there's some US inflation numbers coming up, if those come out weaker and interest rates in the US maybe move lower than they would abroad, that can be reversed. Or if the Bank of England next week comes out and says, oh, we'll jump up 50 basis points, we'll be the leader, you might see that US dollar see some downside again. But for the moment, some considerable US dollar upside coming off of this event, not only against that euro, but against the British pound taking back a lot of ground. And we'll get to the Swiss franc in a second. But just to hammer home, we're back under 110 for the first time in a couple of weeks. And 110's been an interesting level that they tried to break a couple of times in the early part of 2023. You can see there in the late January, early Feb, spent a day or two north of 110 and then came all the way back close to 105. In April, May range, got north of 110 for a few days, came all the way back to about 106, 107. We'll see where we go from here. This could either be the start of a US dollar resurgence or a blip on the euro's path back to 115, 120, where they were in 2021. But for the moment, a considerable US dollar rally. We'll see if that rally turns into an all-out resurgence. Trader sentiment has actually flipped in the last couple of days here from being majority short euro, long dollar when it was closer to 111, 112. Now they flipped to being long euro, short dollar, under 110 here. And this is the IG client sentiment. So of all the IG clients with positions in this market, 52% of them now are long. That's really as close to 50-50 as you can get, but worth noting that this sentiment has gone from short to long in the last few trading days as this market has gone. The underlying market's gone from 111, 112 down under 110. We'll see where we can go from here, but worth watching most European currencies right now against US dollar, especially the Swiss franc that's been very, very strong, historically strong in trade over the course of July, as you can see, getting down to those year-to-date lows around 90 cents or 88 cents, and then breaking them, getting all the way down below 86 cents at one point. Today, bouncing back a fair amount against Swiss franc. The US dollar is, as like I say, it's been strength across the board in that US dollar against European currencies. The only one US dollar is not beaten up on is that Japanese yen. We'll see what happens from the Bank of Japan. We'll see what happens from the Bank of England. Very interesting time to be looking at forex markets as they swing back and forth with multiple markets moving more than 100 pips here today off of the ECB and potential news from the Bank of Japan. That'll do it for today's Forex Focus.